The Indian stock market witnessed a rollercoaster ride this past week, from March 10 to March 15, 2025. The benchmark indices, the Nifty 50 and the BSE Sensex, experienced significant fluctuations, reflecting the prevailing uncertainty in the global economic landscape. Investors grappled with a mix of domestic and international cues, leading to cautious trading throughout the week. The market opened on a positive note, but quickly succumbed to selling pressure, mirroring global trends. Despite the volatility, the market managed to end the week with marginal gains. The Nifty 50 closed at insert closing value of Nifty 50 on March 15, 2025, while the BSE Sensex settled at insert closing value of BSE Sensex on March 15, 2025. The overall market breadth remained negative, with more stocks declining than advancing, indicating underlying weakness. The trading volumes were relatively high, suggesting active participation from both buyers and sellers. The week started with optimism, driven by positive global cues and hopes of a strong earnings season. However, the sentiment quickly turned sour as concerns over rising inflation, potential interest rate hikes, and geopolitical tensions resurfaced. This led to a sharp sell-off in the market, particularly in rate-sensitive sectors like banking and automobiles. However, the market found some support later in the week, aided by bargain hunting and positive news flow from specific sectors. Overall, the Indian stock market remained volatile, reflecting the uncertain global environment. Investors are advised to remain cautious and avoid making any impulsive decisions. It is crucial to focus on long-term investment goals and maintain a well-diversified portfolio to mitigate risks. Monitoring global developments and their potential impact on the Indian economy is essential for making informed investment decisions. The Indian stock market experienced a sharp decline on Monday, mirroring a global sell-off triggered by concerns over rising inflation in the United States. The Nifty 50 plunged over 2%, marking its biggest single-day fall in recent months. The BSE Sensex also witnessed a similar decline, with both indices ending the day significantly lower. The sell-off was broad-based, with all sectoral indices ending in the red. However, the market staged a modest recovery on Thursday, buoyed by positive global cues and bargain hunting in select sectors. The Nifty 50 rose over 1%, while the BSE Sensex gained nearly 2%. The recovery was led by gains in IT and pharma stocks, which witnessed strong buying interest after recent declines. However, the gains were capped by continued selling pressure in banking and financial stocks. Several factors contributed to the volatility witnessed in the Indian stock market during the week. One of the primary drivers was the lower-than-expected inflation rate for February 2025, which came in at 4.5%, below market expectations. While this is still above the Reserve Bank of India's target range, it provided some relief to investors concerned about runaway inflation. Furthermore, global trade tensions continue to weigh on investor sentiment. The ongoing trade dispute between the United States and China, coupled with uncertainties surrounding Brexit, created a risk-off environment globally, impacting investor sentiment in emerging markets like India. The IT sector in particular felt the heat due to its significant exposure to global markets. Sectoral movements also played a crucial role in shaping market trends. The IT sector, a bellwether for the Indian stock market, witnessed significant volatility. While the sector initially faced selling pressure due to concerns over global growth and potential impact on IT spending, it recovered later in the week, driven by bargain hunting and hopes of strong earnings from major IT companies. Section 4. Wipro and Infosys in focus. Among individual stocks, IT giants Wipro and Infosys were in focus during the week. Wipro announced its third-quarter earnings, reporting a better-than-expected net profit, driven by strong growth in its core IT services business. This led to a surge in its stock price, which gained over 5% on the day of the announcement. However, the stock pared some of its gains later in the week, reflecting the overall volatility in the IT sector. Infosys, on the other hand, witnessed profit booking after a strong rally in recent weeks, The stock fell over 3% during the week, despite the company maintaining its revenue guidance for the current fiscal year. Investors seem to be booking profits ahead of the company's fourth quarter earnings announcement, scheduled for next month. Section 5. Investor Sentiment and Outlook. The prolonged downturn in the market has undoubtedly impacted investor sentiment. The volatility and uncertainty have made investors cautious, leading to a decline in trading volumes and a preference for defensive sectors. However, it is crucial to remember that market corrections are a natural part of the economic cycle. The long-term outlook for the Indian economy remains positive, supported by strong macroeconomic fundamentals and a young and growing population. The government's continued focus on infrastructure development, coupled with reforms aimed at improving the ease of doing business, is expected to attract foreign investment and boost economic growth in the coming years. While the market may remain volatile in the short term, investors should focus on long-term investment goals and maintain a well-diversified portfolio.